What do all those credit terms mean? We hear the word credit used all the time. Credit scores, credit report, credit history, credit card, credit bureau, credit line, credit rating, good credit, bad credit. But what do all those credit terms really mean? Well, you've come to the right place because in today's video, I'm going to cover some credit basics and break down what all of these credit terms mean. Now, if you find value in the content, please tap on that like button. It really helps to support and grow the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content every week. Alright, Jordan, so the truth is you are more likely to be judged worthy of taking on a loan or other financial obligation if you have good credit. I mean, the reality is that your credit score is a measure of your ability to handle your finances and your ability to pay. Now, I know what you may be thinking. Should numbers like a good credit score really have the power to judge you as more responsible? I mean, you're being judged by people you'll never meet, and I know that doesn't feel fair, and it isn't. But you still have to deal with the results. With that being said, your best defense is to arm yourself with knowledge in advance. Alright, so in the United States, we get judged by the all-powerful credit bureau, as well as a company called Fair Isaac. Our credit fate is in their hands. They decide just how creditworthy or unworthy you really are. Now, on the good side, credit allows you to access to get money from different lenders. But first, the lenders need to make sure you can actually repay the loan. Lenders will also assess your likelihood to load yourself up with lots of additional debt. Alright guys, so now I'm going to break down the most common terms related to credit. Let's start with the term credit score. So a credit score is a numerical value developed to make it easy for lenders to see how creditworthy you are. So at the moment, a company called Fair Isaac Corporation has 90% of the credit score business. So odds are your lenders either uses their number directly or as part of their own formula. And this is not the same as a credit report. So credit bureaus issue a credit report that details the status of your current credit and credit history from all lenders such as credit cards, loans, and mortgages you've worked with. So the report will also show late payments and any public filings such as bankruptcies and liens. You are entitled to a free credit report every year from each of the 3 major credit bureaus. Alright, so the term credit bureau refers to companies that issue credit reports and now also provide credit monitoring and identity theft protection. The major credit bureaus are Experian, Equifax, and TransUnion. Now the term credit history refers to details of your accounts and payments. This can include late or on time or not at all payments, plus any other negative information as mentioned above. Now, just so you guys know, any negative information stays on your credit report for 7 years, 10 years for Chapter 7 bankruptcy. Now, another commonly used term is known as credit rating. So credit rating is a general assessment of your basic credit worthiness. So do I want to lend to you or do business with you, and how much under what terms? So the kind of things that go into determining your credit rating include how timely and consistently you are in making your payment, your credit ratio of your total debt to your total available credit, the number of credit accounts you have, what type of credit you have, and how long you've had them. Now another term, and one you may be more familiar with, is credit card. So a credit card is a card issued by lenders such as banks, credit unions, and department stores that allows you to pay for things without cash. Now these are provided by major non-banks like Visa, American Express, MasterCard, and Discover. It operates much like a revolving credit where for a set interest rate, the lender offers you the rights to borrow up to a set limit. The amount available to you replenishes itself as you pay back the money owed. Now, after a period of timely payments, the lender will often raise your borrowing limit, which is also known as your credit limit. So lenders will raise your credit limits automatically in hopes of encouraging you to use more of its money. Now remember guys, while it's best for your financial management to pay the full amount owed each and every month, if you're not able to pay it all, at least pay more than the minimum. If not, otherwise you're going to end up paying the lender tons more than you borrowed due to interest charges. Our next term is credit debt ratio. This looks at all currently active credit accounts. This is the total borrowed amount divided by your total available credit. So for example, if you had $1,000 in available credit and you owed $500, that would represent a 50% credit to debt ratio. Now it is recommended that you keep your credit debt ratio under 30%, and those who tend to have the highest credit scores use less than 10 to 15%. So what's important to remember is that potential lenders use this ratio to see if you're stretched too thin. Now when you're going to get a mortgage, lenders typically want to see your debts not exceed more than 45% of your total income. With that being said, Joel, even if you have a good credit score, If you're close to your lending limit, this can affect your ability to get a new loan. Now, the term credit risk refers to how likely you are in the eyes of the new lender to repay the money you are borrowing. And again, guys, they look at your credit score, your credit history, your credit to debt ratio to assess your overall credit risk. Now, there is a credit product known as credit line. So a credit line is a type of loan usually issued for operating expenses for a project or some sort. Although you can use it as needed and don't need to take it all up front. It's different from a revolving loan in that as you use it up, the available credit is gone. It does not replenish or fill up again the way a credit card does. So you may have heard the term good credit and wonder, what does that mean exactly? So good credit really does depend on the lender and type of loan and the lender's particular credit score range. However, FICO scores in the upper 700s and 800s are considered good. Excellent credit is 780 and above. Good credit is 661 to 780. Fair credit is 601 to 660. Poor credit 500 to 600. And bad credit is 500 and below. So again, the term bad credit depends on the lender and their particular credit score range. Bad credit is just a general feel for the way an individual lender might see your score. But typically anything at 500 or below is considered bad credit. Another word used in the credit world is credit terms. What are credit terms, or sometimes known as terms of credit? Credit terms are related phrases explained in this video, but the phrase credit terms has its own technical meaning in the world of credit. Credit terms are the contractual requirements, mutual commitments between you and the lender within the credit agreement you sign. I want you to know, Joe, that credit can be a wonderful thing. Ideally, it lets you have things you need now that you may not have the cash for, but that you can afford. Very important, things that you can afford. Because if you have no willpower, then credit can bring you to the edge of financial ruin, or at least a very bad credit profile faster than you can even imagine. With that being said, guys, be honest with yourself about this. On the other hand, if you use credit wisely and only when needed, doing your best to minimize those interest payments, it can be a wonderful tool for your overall financial management. Credit used responsibly and strategically can allow you to acquire assets to build your net worth and generate passive income. There you have it, Joe Dolls, a breakdown of commonly used terms and phrases relating to credit. I hope you found value in this video. If you did, please be sure to hit that like button and share it with others on social media. It goes a very long way in helping to support and grow the channel. Don't forget to subscribe and turn on that notification bell as I'm posting valuable new content on a weekly basis. Thanks again, and I'll see you in the next video.